These talks are brought to you by Claritax Books and are proudly sponsored by Six Forward Capital Allowances.
Welcome back to our series of talks. Today we're going to look at the topic of enhanced capital allowances. The expression enhanced capital allowances, or ECAs, does not appear anywhere in the Capital Allowances Act. However, the term is widely used in practice, and references to ECAs may be found in a variety of HMRC documents. In statutory tax terms, ECAs are just a variety of first-year allowance. In the last talk, I showed why the lowering of the rate of annual investment allowances was giving renewed importance to the concept of the short-life asset election. The same principle applies to first-year allowances and to these enhanced allowances in particular. Any person paying to construct a new commercial property, for example, may well find that the allocation of annual investment allowances is insufficient to cover all the property fixtures, in which case there can be a significant cash flow advantage if ECAs are available. These first-year allowances are given for energy-saving plant or machinery and for so-called environmentally beneficial plant and machinery. These, by contrast, are statutory terms used in the Capital Allowances Act. The first of these terms, energy-saving plant and machinery, includes such categories as energy recovery equipment, heat pumps, hand air dryers, and air heaters. In other words, we're concerned with a range of assets designed to reduce energy consumption. The key condition is that the assets must meet specified energy-saving criteria. These criteria may be given for a whole category, e.g. for high-speed hand air dryers, or may be split according to a number of subcategories, e.g. for radiant and warm air heaters, where different criteria are given for 3 specified categories of heater. The second heading, though designated with the rather imprecise term of environmentally beneficial plant and machinery, is officially intended to promote the use of technologies or products designed to remedy or prevent damage to the physical environment or natural resources. In practice, we're here concerned with water-saving technology, covering on the one hand such everyday items as efficient showers, taps, toilets and washing machines, and on the other some less familiar assets such as rainwater harvesting equipment, vehicle wash-water reclaim units, and certain types of industrial cleaning equipment. The key condition in this case is that the assets must meet the specified environmental criteria. Once more, the criteria may be given for the whole category, e.g. for vehicle wash-water reclaim units, or may be split according to a number of subcategories, e.g. for efficient taps, where different criteria are given for 4 specified categories of tap. For both energy-saving and water-saving assets, the enhanced allowances are available only for assets that are unused and not second-hand. The expenditure must also steer clear of the various general exclusions that apply to all first-year allowances. For example, it must not be incurred in the chargeable period in which the qualifying activity is permanently discontinued. For companies, but only companies, that are loss-making, the concept of the first-year tax credit allows an alternative form of tax relief for expenditure on these energy or water-saving assets. The allowances would normally just enhance the loss, and that loss would be carried forward to be offset against future trading profits. However, companies may instead surrender the loss and receive a non-taxable cash payment. The expression payable enhanced capital allowances has also been used to describe this form of relief. We'll return to this topic next week, as the mechanics of working out what qualifies for these enhanced allowances can be complex and can certainly move most tax advisors into unfamiliar territory. Thank you for watching. I'm Ray Chidell, author of Capital Allowances and of the A to Z of Plant and Machinery from Claritax Books. This talk was sponsored by Six Forward, an independent property tax consultancy working with accountants to enhance capital allowances for their clients.